Hello and welcome to Beta Heuristics. I am Chris McVitie. Appreciate you tuning into the channel. It is Sunday, February 1st, 2026. Bitcoin on the monthly chart here from the Thinkorswim platform. The low $3,120 to the high $127,240 per Bitcoin. A Fibonacci retracement. The main thing I want to show you here. Bitcoin is trading currently $76,000 per Bitcoin. For a short time, it was below $75,000. Below $80,000 here at the channel, our position shifts from a more neutral to a bearish position. Below 80,000, we shift bearish. Above 80,000, neutral. Above 90,000, bullish on Bitcoin. Long term, over a decade, we view it as bullish. We'll get into the details shortly. The main concern, one scenario, not the most likely scenario. Least likely scenario is Bitcoin hot knife through butter. Scenario one, hot knife through butter, continuing to break downside into the 30s, into the $20,000 per Bitcoin range. You're back testing this previous area of consolidation back in 2023. That's scenario one. Scenario two, not much better for the bulls. It is a retest of this left of price action. We could call this the golden zone from below 80,000 to just above $50,000 per Bitcoin. You can see here, at one point, this candle closed here in March. The month of March closed, the month of April started. This was 8 months of consolidation here before the 9th month broke Bitcoin to all-time highs. The second scenario is Bitcoin continues to decline and is stuck in this range here between $50,000 and $70,000 per Bitcoin and is stuck for an extended amount of time. That is scenario two. Scenario three, Bitcoin is able to sustain above $70,000 per Bitcoin and the short early bears are squeezed out of their position and the gap that formed over the month-to-month open from January to February now, that gap down, a gap down of essentially 8%, that would be filled. That's scenario three. You leave a comment section, leave a comment down below what you believe the scenario that will unfold is most likely. Very quickly, the year-to-date chart. Year-to-date, Bitcoin is currently down 13%. At the lows, it was down 15, almost 16%. For Bitcoin to be entering a bear market, we would need to be seeing Bitcoin trading below 20,000 would be below 71,000 per Bitcoin. Below $71,000 per Bitcoin is year-to-date bear market territory of down 20% year to date. And at the channel here, Beta Heuristics, we've discussed in the past when the channel was American Financial Markets, the yen carry trade collapse and how that was a immediate short-term headwind. People previously borrowed cheap yen when interest rates in Japan were low. They would take that cheap yen that they borrowed and invest in risk-on assets such as Bitcoin. Over the last few years, interest rates have been rising in Japan. Now the 10-year yield's above 2%, above 2.2% last time I checked, and it's showing an increase in yen borrowing cost. So people that previously borrowed cheap yen and invested in risk-on assets have had to sell those risk-on assets to then shore up the yen to cover the higher borrowing costs. This has been a shift in the Japanese monetary system that has first, second, third, fourth, fifth, many implications which are delayed. It is a shift in the global liquidity from Japan moving into risk on assets. And in the long term, the channel views Bitcoin as a long-term smart investment of 1 to 5% of portfolios, depending on the individual's risk aversion. This is not financial advice, but hypothetically, if Bitcoin is only constrained to 22 million in its total supply, that would be it would be a more optimal store of value if it has a limited supply compared to the US dollar, which has an unlimited supply. It's printed and printed into infinity. So the US dollar is a good medium of exchange and it's a good unit of account, but it is not a good store of value because $100 today does not buy the same basket of goods it did 100 years ago. It's radically changed. This is natural. Inflation is natural in a debt-based monetary system where the dollar is printed and printed, and we have continued deficit spending, where governments spend $2 trillion, they bring in $1 trillion in tax revenue, and they have a deficit of $1 trillion, and they have rolling deficits. So long-term, Bitcoin is a good hedge against that natural devaluation of the US dollar from its continued it's not reckless spending from the government. It's blind ignorance, arrogance. It's a level of stupidity in the U.S. government spending that is unsustainable long term, obviously, which is only a bull factor in Bitcoin long term. In the short term, the headwinds are forcing Bitcoin lower. We've discussed the 3 different scenarios here on the channel. The short-term thesis, bear below 80,000, neutral above 80,000, bullish above 90,000. In the immediate short term, in the long term, expecting Bitcoin to provide a good return relative to a good return being a store of value relative to the US dollar's store of value in the long term over the next decade to 3 decades. In the comment section down below, let us know your thoughts, any suggestions. In future videos, we can discuss individual companies such as MARA and how they provide opportunities as Bitcoin proxies, and as Bitcoin is entering more of a bear than a bull market, hedging via a Bitcoin proxy such as MARA can provide opportunities for portfolios to have capital allocated to Bitcoin in the long or short position without actually allocating capital in a cryptocurrency market. These can be future discussion, future videos. Let us know in the comment section down below if you would like us to discuss MARA or any other ETFs or equities which are related to Bitcoin. In the comment section down below, let us know your thoughts on Bitcoin and how it's directionally headed into the end of the year. Which of the 3 scenarios you think is the most likely into the end of the year? Until the next recording, stay green, traders.